Chris Larsen, Ripple's co-founder and current chairman, has sold nearly $200 million worth of XRP in the past 10 days. This action, confirmed by on-chain data, triggered a 17% drop in XRP's price, and many investors are now questioning whether they should hold or sell. Analyst J.A. Maartunn from CryptoQuant issued a strong warning, saying, "Still buying? You're the exit liquidity. He's dumping on you. Think twice." His statement directly points to a concern that retail buyers may unknowingly be on the losing side of these large transactions. But while fear is spreading, not everyone sees this as a reason to panic. Analyst Dark Defender has taken a very different stance, urging the XRP community to look at history before making rush decisions. He reminded investors of Jed McCaleb, another Ripple co-founder who also sold massive amounts of XRP in the past. McCaleb offloaded 266 million XRP in December 2020 alone, earning $148 million at that time. Dark Defender noted that if McCaleb had held those tokens, they would be worth around $940 million today. His point is simple. The market absorbed those sales, and XRP continued to survive and even grow later. This comparison is not just a casual remark. McCaleb's history with XRP is well documented. After leaving Ripple in 2013, he had around 9 billion XRP and began selling them in a structured manner from 2014 to 2022 under a legal agreement. Despite years of steady selling, XRP maintained its place among the top digital assets. It experienced several major market cycles, including a peak in 2018, a sharp decline during the SEC lawsuit in 2020, and a strong recovery in recent years. Dark Defender stated, "No need to fear," emphasizing that the asset's long-term trajectory is not defined by temporary sell-offs. From a broader perspective, large insider sales are not uncommon in crypto markets. The critical question is whether they permanently damage investor confidence or simply create short-term volatility. Looking at the current numbers, XRP has already started to stabilize. After dipping to $2.95, it rebounded to around $3.20, gaining about 3% in just 24 hours. This quick recovery shows that the market is not collapsing under the weight of Larsen's transactions. However, it is important to stay critical. While history shows that XRP has endured similar situations, Larsen's selling still raises issues about centralization. He reportedly controls more than $9 billion worth of XRP even after these sales, and since January, he has already liquidated over $500 million. For some investors, this concentration of tokens in the hands of a few early founders may feel like a structural risk. When one individual can influence market sentiment so easily, it naturally leads to debates about decentralization and fair distribution. Still, the main takeaway is that panic-driven decisions rarely produce good results. The case of Jed McCaleb shows that even continuous and large insider sales did not erase XRP's role in the market. Analysts like Dark Defender argue that patient holders may again see this as a temporary phase rather than the end of XRP's growth story. The real question for investors now is not whether Chris Larsen is selling, but whether the fundamentals of XRP, its adoption, technology, and institutional interest are still strong. And based on current trends, the answer appears to be yes.